YouTube land? We are live. I got a special treat for you today. I like providing as good as info as I can, because on the internet you're going to find all kinds of information, good and bad. VA loan is what some would call the best loan product out there, and to discuss the best loan product out there and really the power of the VA loan, I've got the man, the myth, the legend, Jimmy Hobson. Thanks for joining, brother.
It's good to be here in YouTube land. Love to see everybody out there. Hope you all have an amazing day.
Right, sure. And as we wait for people to hop on, I encourage you, if you're watching this on replay, post your comments in the comments. I do get on there as often as possible. Some great VA experts on your team, Jimmy. I'm having them actually help me answer some questions in the comments, because the thing about home loans and anything you're going to find online, all the information you find is not accurate. Some of it's accurate, but it's from 2016. And so being able to interact live, whether that's in the comment section, answering questions, whether that's joining a YouTube live, I'm here every Monday at 3 p.m. Pacific Standard Time. It's valuable stuff, right? Because getting a mortgage, hundreds of thousands of dollars, buying a home, hundreds of thousands of dollars, it's a big deal. And we want people to feel empowered through education about that purchase. So VA specific, I'd love to just jump into it. I titled this The Power of the VA Loan. I'd love to hear from you, Jimmy, just from your viewpoint, somebody who funds, tons of these VA loans. What do you like so much about VA loans?
It's truly an earned benefit, obviously. Our servicemen and women, whether active or reserves or obviously out of the military, a lot of them have earned this, spent time in war zones and been shot at, obviously protecting us and our freedoms. So they've been given the right to earn this VA loan, and it's an amazing product. Number one, 100% financing, obviously. So, as long as you have entitlement, we can talk a little bit about that. But it's also got an amazing, the best refi possibility of all loans as well. And we can talk about it a little further, but I think to me, it's just an earned benefit, 100% financing, literally with no cap if you qualify.
Yeah. And something too, that makes it more relevant in 2023, every market across the country acts different. Jimmy's got, his boots and roots in Utah. I'm in California. Both of us operate in multiple states, but in 2020 and 21, when it was really hard to get, any government products, FHA, VA, offer accepted, because you had cash, you had, conventional deals, you had people offering 100,000 above ask. The fact that we're in a market now where, sellers are more open to it, and we don't even want to go down that rabbit hole and, how misinformed they are about accepting VA and FHA offers. That's probably another live or video that's a lot longer than we want to do. And you probably don't want your blood pressure to go up today.
YouTube would probably ban me for the words I use.
But we're in a market where every week I'm getting FHA and VA offers accepted, where I know, because we're both operating, and numbers don't lie, that a lot less of these loan products were used during those years where it was just 20, 25 offers, 100,000 above list in wild times. And so not only is the VA loan a great loan to those who have earned the right to use it, but they're actually, able to get those offers accepted and get out there and shop with this thing. So I'd love to ask a few questions too,
Sure.
Just because I work with a lot of investors, and the veterans I've come across, I've seen them do some really cool stuff, right? And like anybody else who's working any other job, you don't want to necessarily work forever. So if you've got this great VA benefit and you can use it to build yourself a rental portfolio, it's going to, help you live your later years with some flexibility and some extra money in your pocket to go travel and stuff. I'd love, either a personal story of a client you've worked with, or just, something on the 2 to 4 unit VA, because a lot of people are like, hey, I can buy a primary residence, but what about if I buy something like a duplex? I'm gonna live in one half.
Yeah, no. So it's funny, is I'm glad you asked that, because it's actually the best loan there is when it comes to investing. even though the VA loan is not designed as an investment product, you can buy a multi-unit with the VA. You can use 75% of the rents or the projected rents to offset the payment and literally move in without any issue. So unlike FHA, which you need self-sufficiency, that doesn't exist in the VA. Now, there are some caveats. Obviously, you need to have history as a landlord. If not, then, well, so let me back all the way up. If you can qualify for it without using the rents, you don't need some of this extra stuff. But if you need to use the rents, you're going to need, if you've never been a landlord, you need to hire a property manager, obviously. And then you need 6 months in reserves. But the cool thing is literally the sky's the limit. Like I've got a guy right now in Southern California shopping for like $1 million, $1.1 million. Another guy right now in Michigan, and quick note to all the people watching, between us, we're licensed in, I think, 44 states. So we can help anybody in the country. If you've got a VA question, and say you get to Matt, you're one of his states, he's got me as backup and vice versa. Right. So, that's really the biggest key. But multi-unit is super cool because you can do that. And then let's say you bought a house. So let's say you were stationed in Salt Lake, right? Or technically Hillfield, which is north of Salt Lake. In the Air Force, you bought a duplex or a fourplex. You PCS somewhere else. If you've got entitlement, you can just get another VA loan if you have entitlement, right? And so that's what you got to look at. That's the beauty of this product. That's unlike anything else, where it makes it super simple. And you don't always get that. Like conventional, unless you're super low income, you're going to be 15% down. FHA, if you're owner rock, you're 3.5%. But again, there's a lot of weird, quirky rules. VA's got a couple, but frankly, I think it's the best product there is. And it's not truly designed to create a portfolio. However, it can be used.
I know plenty of people that have, right? Yeah, and
Yes,
if it's available
yes,
to you, you might as well use it. So I want to pick something out that I heard you say, because it's important for people to hear, and you can elaborate for us. Just because you have one VA loan doesn't mean that that's your last one, and it happens a lot, right? You get stationed somewhere else, you get your papers to move. So what's that process for somebody? And I think too, like as much as you're a VA expert, getting way into the weeds is a specific to that client. So
Sure.
So I like to keep it.
I'll give a general overview. That'll help. So.
Yeah. Can I get more than one VA loan? That's what the average person is going to ask.
100%. So let's say you started out your career and you were somewhere where property was cheap and you bought a condo that was like 150 grand, right? And then you either moved somewhere or you PCS somewhere. You guys that are active duty will know those terms, of course. You still have entitlement. So currently entitlement across the country, if you keep a VA loan and you already have entitlement use, you qualify for 726.2, which is the conforming limit, unless you're in a high balance county. A lot of California, a couple places in Utah, some of the East Coast have more, right? So that 726.2 essentially is 181 grand roughly, right? Let's say you bought a $200,000 house in Florida. A $200,000 house used up 50,000 of your entitlement. So you would take that 181, you subtract 50, so it gives you 131. You times that by 4, which is about 520 and some change. In theory, if you qualify to make that payment, you can buy that much more house. I have clients have 3 VA loans because they bought one at one duty station that was cheap. And then they bought one at another duty station that was cheap. And now the limits have gone up so much that they qualify. Now, the caveat is if you go above that limit, then you're 25% out of pocket. So let's say 726 max. Let's say you have 100,000 left in entitlement, right? If you want to buy a $600,000 house, then you cover the VA guarantee of 25%. So you put 25 cents on the dollar down and you buy a $600,000 house with 25 grand down at VA rates that are better than conventional rates, especially if your credit score say 680. At 680, your rate on a VA loan is dramatically better than any other product other than maybe FHA. Conventional, you're probably half to 5/8, sometimes 7/8 better.
Yeah, that's good stuff. And something you mentioned earlier, which is probably timely. It's funny, Jimmy. I asked you that question. I promise. Scout's honor. Like before Linda had even asked this question. Also, can you explain how a person can have more than one VA loan? I answered the question before it even came. That's how dialed in we are here at UMortgage. Shout out Joey Garessi. Thanks for joining, brother. Saw that Jimmy and Adam West both got some top 1% plaques from UWM today. Well, shoot, I did too, Joey. Mine's not on social yet, but yeah, the best of the best tend to seem to congregate together for some reason.
Adam and I are waiting for our top 20 LOs in Utah plaques because those are on their way too.
Yeah, top 20 in the state. I can't claim that one. There's a lot of loan officers out here in California.
More people live in your county than live in the entire state of Utah, dude.
But something I was going to touch on too, because you mentioned not only having the best loan products by a lot of standards, but also the best refinance products in an environment where rates are a little bit higher.
Yep.
A lot of folks could and should be thinking about, well, if rates ever get better, what does the refinance look at? You know, that VA IRRRL is pretty sweet. I'll let you elaborate, Jimmy, on,
all right,
today I get a VA loan for 5.75. What does the future hold for me?
Yeah, so the VA IRRRL is amazing. So we'll talk about why it's the best there is. So the VA IRRRL is very redundant. It's an interest rate reduction refinance loan. Okay. So the cool thing about the VA is 210 days from your first payment, you can do another loan. Now you can start it sooner than that. You just can't close it till 210. So let's say your first payment was January 1, right? Essentially August 1, you can do another one in theory, right? 7 months. If I'm doing the math right, let's see, February, March, April, May, June, July, August. Yeah, 7 months. Okay. Here's the cool thing about IRRRL is there's no appraisal required. They don't check your income. All they want to do is make sure your credit's good still, and you made all your payments on time. And traditionally, if you do not have a disability rating, you're going to pay a 0.5% funding fee to do that. If you do have a rating or a Purple Heart, there is no funding fee. And normally the only costs involved in those loans are going to be title fees. So literally, when I tell people, it depends on the loan amount. Like my average loan amount is like $450. So if you can save a point on a $450,000 loan, no brainer of the century. If you can save a 1.5 or more, and oftentimes we have enough margin in our rates that we can swallow any and all costs. You can still skip a payment, obviously, because you pay your interest in arrears. It's like when you buy a house. Sometimes you can take two. I don't ever use the term skip two payments because technically that's not accurate. But it's an amazing product that literally is as simple as they get. And the biggest thing that you look at is there's no appraisal. So conventional rate and term refi, you may be able to get away with that on an appraisal. Unlikely, though, in 6 or 7 months. And a VA, piece of cake. So if you signed up at 6.5 today, for example, and all of a sudden, August or September rates are 4.5, it's slam dunk, easy. I mean, July of 2020, I did 34 loans, and I think 20 of them were IRRRLs. Yeah, it's insane.
Good times. Yeah, I mean, if rates are better and you can lower your payment $200, $300, $400, it's sign a few documents and off you go. DN Joe, thanks for joining. Anybody with questions, fire away. We're going to have Jimmy the expert on for 30 or 40 minutes, so we'll try to answer as many as we can. My grandpa was in the Army in the Korean War. He did not use his VA loan. No longer alive, and grandma has a home, and my father does not need it. Can they pass this down loan to me, the grandson? Talking about assumption, I think.
Unfortunately, no. So the VA loan is for a veteran and their spouse. Not family. It's not like USAA where they claim that it passes from family to family. It is for a veteran and their spouse. Kids don't get grandpa's benefits. Grandkids don't get grandpa's benefits. It is an earned benefit. And basically, if you've ever served, and I did not serve, so I won't say this, but you talk to enough spouses of active duty, whether they be men or women, they are serving the military just like their spouses. And they take it pretty seriously because no one knows what it's like when a spouse goes on deployment for a year, other than a military spouse. So,
cool. Thanks for that.
Yeah,
two of the best. You know this guy, Brian Barkowski? He's out in Chicago. What's up, Barco? Good to see you, brother. Hope all is well. VA loan limit in Virginia. Linda wants.
So, Linda, we need to know which county it's in. I've got the forms up. Most counties are going to be 726-2, but if you can type in what county it is, I'm happy to look at that. I'm actually got it right on my other screen to tell you. I saw your question. So
cool. Yeah, thanks for joining, Linda. She said thanks for doing this on VA loans. It's been too long. Jimmy's like, hey, anytime you want to talk about VA loans, let's do it. And then he's been saying that to me for 6 months. I finally just sent you a message.
We should do it all the time.
Yeah, for sure, for sure. Mark McDonough, he's local to me. Happy New Year, brother. Thanks for joining. Love to hear if
what county? What county is Fredericksburg in, Linda? I apologize. I don't know it well enough.
Fredericksburg, Virginia. We're all doing a geography lesson now.
New Hampshire. So I'll Google Fredericksburg real quick as well.
All right, Joey Garessi. one of my favorite dudes from Oklahoma City, even though we're not rooting for the same team.
So it looks like Fredericksburg is in Spotsylvania. That's quite the interesting name.
Spotsylvania.
Spotsylvania County. According to this, Spotsylvania County is a high balance county, which means the single limit VA loan in that county is $1,089,300. Awesome.
Sweet. Only it says Fredericksburg, Virginia, only's got 29,000 people. It's a small town.
Yeah, it must be in a fancy, vacation area or something.
Yeah, something like that.
Nice.
Cool. Thanks for that, my man. And then if she's trying to buy a $2 million home with a VA loan, maybe get into how that might work with the VA loan.
So if you have full entitlement, like for example, you do not have a VA loan currently, you can qualify. As long as you can qualify to make the payments, you can qualify. If you have entitlement that's tied up, then we'd have to look at it based on that. So
yeah, I mean, because that's the thing too, is like, yeah, there's a county limit, but for all intents and purposes, there's no true VA loan limits. But like all things in mortgage, you got to talk to a professional. You got to reach out to Jimmy and his team, me and my team. I make it really easy on them, Jimmy. All they got to do is go to greatmortgagebroker.com. They fill out the form. Somebody from one of our great teams reaches out to them, whether it's Connor or Adam or Kyle or somebody else, and no matter where you're at in the country, reach out to us. Like Jimmy said, 44 out of 50 states. If it's one of the other 6 states, I'm going to connect you with a top broker in that.
Yeah,
state.
we know. I mean, here's the thing: is especially VA wise, I know the best VA originators in America, no question. And some of them work here, and some don't because they're in those states like Nevada or Hawaii. Either we're currently not in, but I've got great connections in Hawaii, as does Matt. Guys like Major and Adam Corrales, they're killers down there. Just amazing. Nevada, obviously, we know a handful of ladies that are excellent. And then we'll go from there. So,
yes, sir. Joey Garessi. I knew this was coming before it even got asked about assuming a VA loan. I know you all aren't servicers, but do you have any friends, associates that were ever successful in assuming a VA loan as a non-occupant investor? I don't know if you've heard of anything like that, Jimmy. It sounds like
I've been told you can. I mean, I don't specialize in assumable loans, other than the fact that I know it's a giant, monstrous pain. I mean, I've heard 3 to 5 months. I mean, the servicer has no reason to help you. They don't. I mean, no one's getting paid to do it. They don't care. You know what I mean? Because frankly, they'd rather have higher rates. So, right.
Yeah. So yeah. It's we both heard of the unicorn, that it's possible. We just never seen the unicorn, Joey, is the bottom line on that one. But assumptions, as much as in theory they sound really great, and I actually have a video that I got to make on assumable loans because people keep asking me about it. It just doesn't align that often where somebody owes $245 on a VA loan or an FHA loan, and they're trying to sell their house for $400. You're going to get a buyer that's able to assume that loan, make up that spread of 160,000 down, or whatever the case may be. It's harder than it seems.
Well, it is, and here's the reality: is even though VA loans are assumable, the lenders can do whatever they want. They don't have to allow you to assume it. So,
yep. Linda said, "Wow, sounds like she'll be reaching out to you, Jimmy, for a $2 million loan, buying something in this fancy Fredericksburg, Virginia." I know nothing about it, but I'm just guessing fancy.
So we should be in Virginia here in the next month, I believe. We are not active there yet, but Virginia, Linda, if I can help you, I mean, both of us know some amazing folks. If you're sooner than later, if you got a little bit of time, would definitely love to talk to you a little more and see what's possible. So
cool. Mike from New Hampshire, thanks for joining. Appreciate you. Cost of living in New England is outrageous. I believe you. I mean, there's other markets, a couple markets close to me in California where people feel the same, where it's pretty wild, with $1 million, 1,100 square foot homes. But move to a nice place like Sacramento. You can still buy something in Sacramento for $500 in a good neighborhood.
Yeah, what about kind of the way we are too, just north of me?
Yeah,
is there's still nice stuff actually. 400-ish.
Wow. That's
not
pretty
far
good.
from the actual military base, so it's good.
Yeah. What are property taxes in Utah?
Amazing.
Yeah.
So my house assesses with the county. So Utah's a non-disclosure state. So let me get that out here. So my house assesses like 800 to 900 grand. It's worth a lot more than that, but it assesses that number. My taxes were $4,800 last year.
God.
So that doesn't mean you all need to move here, but if you need to, you can call me.
If you have to, give me a call. Wow,
Yeah.
that's friggin', that's amazing. Because I don't know what my current assessment is, but it's like the assessment has got up to the true value, but I think I'm paying $7,000 a year, and my house is worth much less than yours.
Yeah, it's yeah. Our taxes are great. We get like a 55% breakout here for primary residence, and our state income tax is also awesome. It's 5%.
That's enough of this conversation. I live in California, so.
Let's get your primary here, make California your second home, so you don't have to use it as your primary residence.
Yeah, all my friends have a new primary in Nevada now, and then they got
I'm
their
sure they
Southern
do.
California house or something. All right, Mike Arasi is how I'm going to guess you pronounce that. What can you tell us about USDA loans? How do they compare to FHA? Can we buy a multifamily with USDA?
I love it. So multifamily, no. Okay. USDA, my opinion, take it for what it's worth. So it's number one, it's the hardest loan to qualify for because the ratios are much lower. I've done a bunch of them. However, in my opinion, it's the second best loan there is behind VA, actually. So lower mortgage insurance, you're 0.35% monthly. So for every 100,000 you borrow, it's about $30 a month in mortgage insurance, and it's 1% upfront. So FHA is 1.7% upfront, USDA is 1%, and then instead of 0.85 monthly, it's 0.35 monthly. So, and they don't have loan limits; they have income limits. So yeah. It's an awesome loan, though. I mean, yeah. I love that loan. But again, it's the hardest one to qualify for because when the guidance of what ratios should be in the loan guides came out, as you know, Matt, I think the guidance is like 31 and 43. The guidance on USDA is 29 and 41. And unless you're 680 or above with great assets and reserves, it's manual underwriting. And if you're 29.01, you don't get bought.
Yeah, yeah. If you qualify, it's a great loan. You also have to remember that it's a rural loan. So like not all areas you can get this loan. You can go to USDA.gov, I think, and type in an address and see if it's eligible. But there's plenty of places in California where, if you're off the beaten path a little ways, it qualifies for USDA. But after that, it's the income and the debt to income ratio and all the other things that you got to make sure you check.
It's funny you say that. I mean, about 80% of America is USDA eligible.
Wow.
Not that we're here talking about USDA loans, but it is an amazing product if you can qualify for it.
Yep. All right. Linda's here in California with me, so I'm glad I didn't. Glad I didn't berate California. Son is active duty out in Virginia, so yeah.
What county is Monterey in?
It might be Monterey County, but it's beautiful. Take the kids to the Monterey Bay Aquarium.
So crazy enough, that's loan limit there is 915 for VA.
Yeah.
If you have a prior VA loan, I wanted to check because you never know.
Yeah.
Now multi-unit, there are some counties that are like 1.6 to 2 million on a fourplex. So,
yeah, that's wild. Okay, pronounced a race, Mike, a race. I need to use a multifamily income to help. Yeah, I mean, I think too, like when it comes to, Mike talked about, prices and affordability and all the other things. I think where a lot of people get tripped up is it's like, what do I qualify for? Or help me qualify. I need income. It's a matter of what's a comfortable payment and structure a mortgage that makes sense for you, not just like something you'd qualify for. So that it might make sense, Mike. I work with investors. I probably do 50-50 between investor stuff and people buying their owner occupied residence. So I work with a ton of investors. If the numbers make sense and you can do it and your living situation allows for it, like, not everybody can buy a triplex and live in one of the 3 units. I don't know if your wife would be cool with it, Jimmy, but my wife wouldn't. Wouldn't.
Not with the other 4 people living with us.
Right. Yeah. So, if you're able to buy a multifamily, it's a great way to get into real estate. And, for people that are worried about affordability, when you've got a $6,000 payment, but $4,800 in rents to offset it, it feels a lot more comfortable than going out and getting a $3,200 mortgage all on your own.
Yeah.
And then, of course, you buy another house in 5 years, 7 years, whenever you move on. Now you've, got this rental property with 3 units behind you. It's a pretty cool thing. And I know I've done a ton of those. I know that, Jimmy and I both own personal investment properties. So it's like, I'm eating my own dog food, guys. I'm not talking, good about, multi-unit investment properties and real estate in general if I'm not doing it myself.
Yeah. I mean, if I were to go back in time when I bought my first house and knew about it, I would have bought a duplex.
Yeah.
Because it was just me and my kid at the time. You know what I mean? So, but that's a different world than I live in now. So.
Yeah. I mean, if I was 21 again and if I could go put 3.5% down FHA and buy a fourplex and just have, my college buddies all living next to me and actually paying rent. I think a lot of them slept on my couch. They didn't pay any rent at all. So I could have been making some money off it, and then, coming up on my 25-year high school reunion. So that thing would have been almost paid off by now. I know I don't look a day over 21, but.
Yeah, well. I love it.
We used my husband's VA loan when we purchased our primary property 25 years ago, then did a conventional refi. Looking to use his VA to purchase a 1 to 4 unit property and lease out our current home. Monterey County. Huh, that's cool.
Yeah, so a couple things. They're going to want to they're going to want justification of why you're going from a single family to a multi-unit. So you got to explain that one away. The cool thing is, though, is the VA on a departing residence, they won't let you count any of the income from the departing residence, but they will allow you to offset the debt at 100%. So if your payment's $2,000 and you get a $2,000 rent, you 100% offset. So that's the good news about the VA. You don't use the 75% on a departing residence. But again, getting to thanks, Linda. We appreciate looking so young. I'll be 50 this year. But so you got to be able to justify going from a primary residence to a multi-unit unless they're a distance apart. Yeah, not saying you can't do it, and I think it's very possible. I'm just letting you know that some underwriters like to get a bug up their ass about it. So
yeah, and you would know better than me, writing the number of VA loans that you write, Jimmy. With all loans, if you're house hacker, investor, if you're doing creative stuff, underwriters just want to make sure it's legit. They're going to ask questions. So I know, the same would be true for an FHA or a conventional loan. Yep. Why are you going from a 1,500 foot single family to a triplex that's 1,000 square feet per unit? In your experience, Jimmy, are most underwriters going to, with a reasonable explanation, sign off on something like that?
If it's reasonable, yes. But it's got to be reasonable. It's got to make sense. There's always a way to make something make sense in the grand scheme of things. I'm not telling you to commit loan fraud by any means.
Right. Yeah. That's the thing too, is I got investors that are really doing it. And you look at it and like, I don't know. You just
got to make it make sense. And it's do it above board and you're good. You know what I mean? And that's really the way to go. Don't try to game the system. But frankly, at the end of the day, if you qualify for it without using rents, they're never going to say a word to you because you qualify for it. The biggest thing is if you're using rental income from the other units to qualify and you've got a primary single family, they're like, well, what are you doing? Because why are you moving from, a house in Monterey on the beach down, to this, right? So there's always ways to structure to make it make sense. It's a matter of nuance. And again, having a good underwriter that you can, our job as much as anything else is to paint a story within the guidelines.
Right. Yeah. And the thing is too, like when underwriters ask questions, you have to write a letter of explanation. It's not a bad thing. They're dotting their I's and crossing their T's. When I bought my current house in 2017, Jimmy, I moved exactly 3 doors down and across the street. Yeah. And they asked me why are you moving? And I said, my wife hates being backed up to the freeway. And they're like, okay, well now you're 3 doors down from the freeway. What's the difference? And the truth of the matter is there is a difference. And the new place had a pool and the new place had a bigger lot and all these other things. But, they're going to ask questions. They just have to make sure that there's justification and their file is, complete with all I's dotted and T's crossed. ERN, since you've got the mask on in this picture, I don't know who this is, but thanks for the blast in the past. Matt used to be a young man at the poker table and running the room. I don't know if you knew this, Jimmy. I used to run a poker room.
I remember you talking about it.
Yeah. So, it's interesting too. Me and the wife went and played some poker on Saturday, and it seems like a past life being 9 years and hundreds of millions of mortgages behind me. That I was running poker rooms, but man, that was a fun time. And
I actually played in one of the World Series events. One of the times of my life, man. So.
Yeah. Nice. Yeah. We were there in the summer. My wife played the main event, and, poker still holds a special place in my heart. To me, it's kind of similar to mortgage, where I like working with all kinds of different peoples with different stories every single day. You go to a poker room and you got, a big mixed bag of different folks from different backgrounds and different, income levels, all kinds of stuff meeting in one place to gamble up. All right. Mike A. Race. That's how he told me to pronounce it. How much of the rental income or projected income from a multifamily can be used to help DTI qualify?
So I saw his question. My opinion is you guys need to get on a phone call, because VA can answer, but it's hard because FHA has a self-sufficiency clause. Conventional is different. You can normally use 75%, but again, there's other caveats to that, Mike. So I would get on the phone with one of our guys and kind of figure that out. You're fine. No worries. Yep. I would try to figure out how that works, because I think a phone call is warranted depending on the state you're looking to do it in. So
yeah, for sure. And that's the thing about mortgage, greatmortgagebroker.com. It connects you with somebody on the team that's more than happy to help. Regardless if you're buying this month, next year, getting the information and knowing the right answer to things is important. And it's always interesting to me when I'm interacting with somebody too. It's like, what's today's current rate? Conventional. And you're like, well, investment property, owner occ, 30% down, 5% down, 790 score, 622 score, all these things. There's so many different, nuances to it that really, it's a matter of getting answers to your specific scenario. And there's not, a simple, quick, here's the answer. So yeah, connect with us, Mike. More than happy to help. And, for anybody looking for mortgage information, whether it's VA or any other loan type, getting the information certainly doesn't hurt. You get on the phone with somebody from our team. We're not going to try to sell you anything. We're just going to try to educate you and prepare you for when the time does come. That's the antidote for the big, scary process that is getting a mortgage to some people. Educate yourself a little bit, know a little bit about it, and say, you know what? Based on all this information, now I see that, $2,600 a month, if I put down this much and I get this interest rate and I buy at this price point, okay, I can do that. And, I see what all the fees look like. It makes it a lot less scary when you're informed that way.
Well, all right. Now you've got a ton of videos they can watch too that go through every subject. You know what I mean?
About 700 now. Yeah. If you go on the YouTube channel and you type in Matt the Mortgage Guy, should I buy points? Matt the Mortgage Guy, how does an escrow account work? Matt the Mortgage Guy, jumbo loans. Matt the Mortgage Guy, self-sufficiency test, which is something that Jimmy mentioned. On an FHA loan, great loan for a multi-unit property, and like we were talking about, if I could go back, I'd buy a 4-unit. But I just literally talked to a guy who got into contract in New York and didn't realize, if I'm buying at 1.1 and it doesn't pass this self-sufficiency rule, I can't buy because FHA is not. And he's like, what lender can I talk to that can do it? Not our rules, right? It's FHA's rules. And so it's something that you got to be aware of. So yeah, just fill out the form, Mike, with your phone number. Someone will call you. Greatmortgagebroker.com. It's a system we got dialed in to reach out to us. So look at Linda. She's trying to buy everywhere. She wants to buy in Santa Clara County now. Santa Clara's got to be $1,089,000.
It is. Well, that's just for but for single family. If you're looking at a fourplex, it's $2,095,200. Massive. Yeah. You got to go live by all your friends in Silicon Valley and go to Google every day, or what?
Yeah.
Went down to the executives.
Yeah, Santa Clara County, a duplex is going to cost you, 2.2 or 2.1 million probably, because it's not a cheap place to live, but it's nice. So,
I love it.
cool, man. Anything I missed on VA loans that you think about when you think about like common questions people ask?
I mean, really, it's it's the most. So there is no credit score limitations. That is a lender overlay. We have lenders that go all the way to 500. That's one big thing, obviously. You can have multiple VA loans. There are certain things, obviously, right now, if you're active duty. So a couple things that I'm going to do some videos on soon, but boot camp and tech school or infantry school does not count towards your active duty time. So once you get actually stationed, after 90 days, you can get a VA loan, right? Now, anyone that's got 90 days active reserves, we can answer all those questions, and I don't want to get too detailed. But if you've got questions about it, you can get the questions to Matt and his guys. He can get the questions to us. We can make sure we solve that to see if you're eligible. A lot of the stuff is tax-free. VA disability is tax-free. Housing and food in the military is tax-free. So those can be grossed up to qualify you for more. VA's got one of the most liberal student loan policies there is. Let's say you have 100,000 in student loans. What you do is you take 5% of that number and divide it by 12. So really, if you do that, you're $5,000 divided by 12, which is like $416 a month, roughly, is what you got to count. Whereas everybody else, you're at least 500, if not 1,000, on that very same thing. So that's very liberal. Also with the VA, if your student loans are deferred more than a year, they don't count at all if it shows 0 on your credit. So, those are just some basic, simple things. It is the most flexible underwriting there is. There's less lender overlays. And I say this all the time, and they're like, well, I've always told that conventional is better rates. No, the only time a conventional is better rates is if you go to a lender that is ripping you off, veterans. So remember that. A VA, all things being equal, a lot of lenders will set their margins on government rates higher, and they'll charge you more for a government rate, like an FHA and a VA borrower, which is, don't get me started there. I don't have enough kind words to say about that. But all things being equal, we as brokers, with the history of brokers, we charge the same across the board, right? So if you look at a conventional loan and a VA loan side by side, the VA loan is always going to be cheaper. Rate's always going to be cheaper. Closing costs in theory are cheaper. A lot of misnomers about seller having to pay all these costs for the veteran. 100% not accurate, right? But that's always the scary thing. That's what 20 agents, I've been doing this for 30 years, all that misnomer about the terrible VA loan, right? The biggest thing also is the VA appraisal. At the end of the day, the conventional appraisal, 92% of the time comes in at value. VA is like 91.7. So that's the biggest misnomer that people get, when that's frankly the reality is the VA loan shows up at value or more almost as often as conventional does, and higher than FHA. So that's my thing, is if you're a seller listening or you're a veteran, don't be afraid to go through that offer. So we want to make sure we can attack it. So
yeah.
Does it take longer to close a VA loan? If you're working with the wrong person, it does, Linda.
Right. Yeah. And that's the thing too, is you want to work with the right people. As you were talking, Jimmy, it reminded me that like people don't know what they don't know. So if you're a consumer and you didn't know this, like somebody having a name with VA in it does not make them anything special tied to the VA. Like they've got special access to something. We're all brokering VA loans. Some of us, like Jimmy said, in the broker channel are just doing it for cheaper. Other retail lenders or other outfits, Veterans United, without naming any names, like they're just charging more. But since they have the name and people just relate that to like, oh, they must be on the same team, they're going to get business where like it's a huge disservice. And like, I know that I don't want to stoke a fire because I get as fired up as anybody else about it. Like somebody who deserves more than anybody else the best loan product and the lowest fees and lowest rate, to charge higher margins on those loans and make more on those loans it's a disgrace. And so make sure that you shop it, make it easy on yourself and just go to greatmortgagebroker.com and connect with our team. Cause someone in the 44 states we're licensed in is going to be able to help you out. And, you ultimately deserve the best deal. So, another big misnomer is people will use fancy marketing to be like, work with us, a direct line to the VA, or work with us because we're, this. Like it's It's
So
all.
let me address that real quick. The VA does not do loans. The VA home loan program is a home loan guarantee. They guarantee loans. So if someone tells you they're with the VA, they represent the VA, they are lying and committing fraud. So, yes, we have to be licensed with the VA. We have to be approved to be able to do loans with the VA. All these big lenders are approved to do loans with the VA, and they have what they call automatic authority. But if someone tells you they represent the VA, run as far and fast as you can to get away from them, because that is not an accurate statement. The VA does not, nor have they ever done a home loan.
Yep. I like it. That's a good place to end it, man. I appreciate your time, Jimmy. I appreciate you jumping on. Like I told everybody too, greatmortgagebroker.com to connect with our team. We're more than happy to help. Whether it's VA loan or any type of loan, we're passionate about, life-changing opportunities through home ownership. So reach out to us. Thanks again, Jimmy. I appreciate you, brother.
Of course. Thanks, guys.
Yep.